So I want to thank Eric Satz for joining us here today. And Eric has a very unique background, but I'm just going to let you kick things off here, Eric, and tell everybody what you do and give us a little bit more information.
Well, thanks, Jack. I'll talk about what we do first, and I think you know the audience should know that I'm the founder and CEO of AltoIRA, and we enable individual investors to access their retirement savings for investment in alternative assets. The most prominent alternative asset being real estate. And the other way to think about alternatives is non-publicly traded securities. So maybe it's an investment in an early stage company, so venture capital, or later stage private equity. Maybe it's a marketplace loan. Maybe you're interested in crypto. But certainly real estate has up till now dominated the landscape of alternative investments, specifically for individuals who want to use their retirement savings accounts for those investment purposes. And the industry historically has referred to this type of investing as self-directed IRA investing. Mm-hmm. And actually your website, you know, for your listeners does a really nice job of providing some historical context and background to the self-directed IRA industry. And so I would encourage people to go to your website, you know, if not our own, to learn about self-directed IRA investing.
Well, thanks for pointing that out. We recently relaunched that website, so it's good to have that kind of feedback. So I understand, you know, regarding self-directed IRAs, but I think we might even actually have to start with that as an idea, because I think some people have some misconceptions of how they can use it, what it is, and some people might even refer to it as checkbook access accounts and what have you. So can you talk a little bit of all that? Like, what can you use it for, what you can't, and how do they access those funds?
Yeah, so, and maybe I could talk for a second about why we're doing this. And sure. You know, so it's projected that by 2050, there will be 25 million elderly Americans living in poverty in the United States. And, you know, often referred to by the media as the looming retirement crisis.
Sure.
One of our main objectives as a company is to help turn those circumstances around. Mm-hmm. And we believe strongly that if people only have access to ETFs, mutual funds, index funds, they're never going to see the necessary returns in order to be in a position to retire in a way that, you know, they probably thought they'd be able to retire when they were younger.
Sure.
And so by making alternative assets accessible to the average investor, and again, by alternatives, we mean illiquid, longer-term investments that you can't just trade in and out of on a daily basis, these assets tend to carry what's called an illiquidity premium, which is an expected higher return in exchange for some of these characteristics that are maybe a little bit more restrictive than if you were just investing in IBM or Google, Yahoo, some, you know, publicly traded security, right? And so what's happened in the public markets on a macro level is that we've seen significant shrinking of public companies, just the quantity of public companies. So it used to be that we had almost 9,000 publicly traded companies. Today, we've got less than 4,000. And of those less than 4,000 companies, probably 5% account for 90% of the profits in the markets, which means that every ETF manager, every mutual fund manager, every index fund manager has to stuff their fund with the same sort of combination of companies or stocks.
Sure.
Which unfortunately has the consequence of eliminating outsized, what we would refer to as alpha returns, right? So you're not going to see the 10%, 12%, 14% returns as a public market investor that we used to be able to see when companies like Apple and Cisco and Yahoo went public way back when and would raise $100 million at a sub-billion-dollar valuation. Now the companies like Uber and Lyft and Slack and others that go public, they're raising, billions of dollars at multiple tens of billions of dollars of valuation, which means unless you were invested early, unless you were invested at a private level, you're not gonna experience and benefit from those outsized returns. And so the reason we started the company was to make it easier, simpler, cost-effective for individuals to be able to access their retirement savings and invest it the way they want to invest it. So if you have an account with Schwab or Fidelity, the two 800-pound gorillas in the brokerage space, and you have a retirement account with them, and you say, hey, I found this piece of commercial real estate in my hometown, or I found a residential opportunity in my hometown, and I want to use my IRA savings to purchase that property, they would say, that's great. We're not going to custody that asset. You're going to have to figure out how to do it on your own. And that's where the self-directed IRA industry and AltoIRA in specific comes into play, because we are going to custody those assets. We are going to allow you to make those investments.
Sure.
And we're going to help you do it in a streamlined fashion that makes economic sense.
Sure.
And I can't even remember where we started exactly with this conversation right here with this thread, but hopefully where I went had some value.
Yeah, no, that was a really interesting point. I haven't actually heard anybody bring that up before regarding the number of corporations are reducing, forcing all of the investment accounts to basically acquire the same type of stock over and over again. I would have to think that, like you mentioned, it probably devalues. I shouldn't say devalues, but it actually reduces your returns because of it. I haven't heard anybody mention that before.
Yeah. So if there's no in this case, where the same, let's just call it 200 companies are accounting for the majority of returns in the, not even majority, the super ultra majority of returns in the marketplace, they're going to be fully valued, right? So there's very little upside left.
Sure.
In from a public markets investor perspective of owning that basket of goods. Like maybe you'll get 2 to 3%. Okay. Right. And I think if you look historic, there's lies, damn lies in statistics. And, so you could probably pick any sort of 30-year period of time and, make the numbers say what you want them to say in terms of returns. But I think if you look at a trending 30-year return over time in the mutual fund industry, what I think you're going to find is it's 3 to 4%. And so for me, this is nothing more than math. I can save X amount per year, and if I'm earning 3 to 4% on it in 30 years, I'm going to have this much money.
Right.
At 3 to 4% growth, that much money is not going to be a big soft landing pad from a retirement perspective.
Right.
You need some 10s and 12s in there to really get the numbers to work.
Sure. So these alternative options that you're talking about, real estate obviously is one of them. So can you kind of paint that picture or flow it out? Let's create an audio flow chart right now on how this works. Like I identified a property and I want to do something with it. How does that process work with a self-directed IRA?
That's a great question. That's a great question because you mentioned checkbook control earlier, and that's a point I forgot to bring up. So checkbook LLCs, IRA LLCs, real estate IRA LLCs, they're all just sort of synonymous for what the industry most commonly refers to as checkbook LLC and checkbook control. Mm-hmm. And what that means is your IRA establishes and is the sole owner in a new LLC limited liability company. Mm-hmm. Your LLC then establishes a bank account. Mm-hmm. And then you, as the manager of that LLC, are able to direct cash into an investment of your choosing, so long as it doesn't. So long as you're still not violating any of the prohibited transaction and disqualified person restrictions on IRA investing. But the reason this is important, most particularly or specifically for real estate investing with your IRA, is because that there are ongoing recurring expenses associated with real estate, right? You have the upkeep, you've got maintenance and CapEx, you've got property taxes, and it's otherwise cumbersome in the past. It would otherwise be incredibly cumbersome to go to your self-directed IRA custodian, ask them to send a check to Home Depot for light bulbs, or to your painter for repainting a wall, or for property taxes, whatever it may be. That's just a lot of work and totally cumbersome. But if instead I create this LLC that I fund with my IRA, and I use the LLC to purchase, I use the LLC to purchase the property, I can then write the checks out of that LLC bank account to cover all those recurring expenses we've been talking about, right? And so I no longer have to go to my custodian to do that. I have control over the checkbook, and I can do it. I can do it easily. Mm-hmm. And so one of the things that we do at AltoIRA is we have an automated process for new LLC creation and funding of that LLC with your IRA. And then we will also connect you with a bank for purposes of opening that new bank account and getting you checkbook capability, et cetera. So that's one of the things that we do to make real estate investing out of your IRA a lot easier.
Sure. So can you talk a little bit about are there any restrictions associated with how that money can be used?
Yeah. So, and I'm not going to be able to cover all of them, but right. but I'm going to cover some big ones. So people just right off the bat, a lot of people say, "Oh, I want to buy a second home," right? And in Aspen, Colorado, right, or Hawaii, and I'm gonna stay there 3 weeks or 6 weeks a year. Because I've been doing so well with my real estate investments, I can do that. And that's a big no-no, okay? So you can't buy a piece of property that you, any of your ancestors, or any of your descendants use. And by ancestors and descendants, I mean your direct ancestors and direct descendants. So not your parents, not your grandparents, not your great-grandparents, not your kids, not your grandkids, not your great-grandkids, that sort of thing. Mm-hmm. Your brother or sister, fine, right? Your spouse's family, fine. Just, it's not up and down not available to you up and down your own sort of genetic line, let's call it.
Sure.
So you can't do that. You can't buy a second home. You can't buy a primary residence. This has to be purely for investment purposes. So that any rental income goes directly back into, if you're using a checkbook LLC, it's going to go directly back into that LLC account. It can't go to you personally. If you do these things that are not allowed, you're going to blow the tax advantage status of your account. So it's very important that you don't do these things. I'm trying to think of any. You can't. So if you buy a property, you can't then turn around and rent it to your son or daughter.
Sure.
Right. And you also can't buy from any of these people, including yourself. So let's say you've owned a rental property for a few years and you're listening to this podcast for the first time and you're like, oh my God, I had no idea I could use my IRA to buy a property. I'd rather have the tax advantage nature of that investment. I'm going to buy the property from myself that I bought 3 years ago. Can't do that.
Sure.
Okay. So you can't do anything to benefit you yourself as an individual separate and apart from your IRA account. The IRS looks at you and your IRA as two entirely different entities, and one is not allowed to benefit the other.
Okay. Huh. So with that being said, you can't use any of those properties or your descendants. Is there any other restrictions that you need to be aware of then? Like it sounds pretty straightforward, really, when you boil it down to that.
Yeah, with real estate, it is actually relatively straightforward. When you start getting into private companies and investments there, then it gets far more nuanced in terms of, okay, well, does one of your ancestors or descendants work at the company? If they do work at the company, do they own any of the company? If they own any company, do they have a controlling interest in the company? If they don't have a controlling interest and they don't own, do they make more than 10% of the salaries of the company? Like there's just a series and progression of questions, which if you go to the Alto platform and you tell us, we ask you all these questions, by the way, if you sort of self-select into a bucket. So the first thing we say is, are you or any of your ancestors, descendants? I think we use nicer language than that, but I'm whatever. So we ask you in a way that you can understand. And if you say, no, none of those things are true, then we don't ask you any more questions, right?
Sure.
But if you say, yes, somebody works at the company, then we have to get into the whole next, you start to peel back the onion, right? And see just how deep it goes. And we try to help you figure out whether or not you're entering into a clean transaction. So it's certainly more nuanced when you get into the private company world. Real estate's pretty straightforward. The other thing that you need to be aware of, by the way, is that if you're a buy and hold type of person and you're using your IRA to buy and hold property, then that's very clean. But if what you're doing is running essentially, if you're flipping houses, well, then the IRS is going to say that those homes, that's actually your business inventory. And now you're going to owe tax on that activity, even though you're doing it with your IRA.
Okay, I see.
And again, that gets into more nuanced law that has to actually do a trust law and trust taxation. But so long as you're not flipping homes, meaning, if you buy and sell a house once a year, that's one thing.
Mm-hmm.
If you buy and sell 5 houses in the year, that's another.
Sure.
Right.
Yeah.
And so you're going to have to consult with some sort of tax counsel.
Sure. Yeah. No, I understand. So how about going a different direction then? It sounds like if you're buying and holding with a property, that's pretty straightforward, and you can maintain and operate that out of your IRA. How about lending that money to somebody else? I would guess it's a similar thing where I can't lend it to my string of DNA, like you said,
right?
My ancestors. But how about like within a community or something?
Absolutely. Loans are 100% good. So, you want to make a $10,000 loan to a friend, you're totally great. Clean as a whistle.
Sure.
Absolutely.
Do you handle that type of transaction then to make sure the documents are properly in place? And
we do. So we don't create the documentation for you, but we control the document workflow process, and we enable all electronic signatures. And
Sure.
so one of the big differentiations that I would point out between AltoIRA and any other sort of self-directed IRA custodian is that we've built a two-sided platform that accounts for investors on one side and what we call issuers or borrowers on the other. And so historically, the industry has only ever had a relationship with the investor. But anyone who's done a significant amount of transaction volume understands that it's the issuer or borrower who's generating the paperwork.
Sure.
Okay. And the deal documentation. So it's a little bit silly to ask the investor to do all of the legwork, the heavy lifting of getting everything into a system when the other party, A, is completely incentivized to participate because they want the money, right? Whether it's through the sale of equity or debt. And 2, it's easy for them because they created it. They have it. And so either the investor is able to invite the issuer to the AltoIRA platform or vice versa. Doesn't matter to us. And when those the platform acts as the hub and automates not only the invitation creation, but it then automates all of the necessary workflow process. It instructs both the investor and the issuer as to what the next step in the process is, and it notifies the other party when one has completed a step, and it's now the other's turn to do the same. And so the platform automates all of that. It performs everything online. It does it all with electronic signatures, and it's actually, if I do say so myself, it's really quite easy and good.
Yeah. So how long have you been doing this now? Like, how long did it take you to develop that type of platform?
So it took us about 2 years to develop the platform, and we launched about 15 months ago, and we launched together with a platform called AngelList, which is an investment platform for mostly alternative early stage equity types of transactions. So, another huge differentiator for us is that we have a full set of APIs, which allows us to integrate our workflow with investment platforms like AngelList, like WeFunder, like Republic, like Yield Street. There are, I don't know, I think our platform partners are up on the website, but the point is we enable seamless transaction execution, not only through kind of your own deal flow, but if you find deal flow on an investment platform, we can also help facilitate those transactions as well.
Sure. So, since you bring Angel Flow up, crowdfund. It's basically crowdfunding, right?
So AngelList will take exception. They
Okay.
very much do not like the
term crowdfunding.
And that's and I understand why. That's because of Kickstarter and Indiegogo.
Sure.
So, a lot of the marketplace thinks of crowdfunding as the crowdfunding projects,
Sure.
not purchasing securities, making investments. And so we like to refer to our partners who are taking investments from the crowd as investment platform partners.
Sure.
But yes, it's crowdfunding, except for equity.
Yeah. So did it, crowdfund, well, it's one of those things that it's becoming a bigger thing in real estate as well. There are platforms like this that do real estate. Can you use a self-directed IRA in those type of scenarios too?
You can. So whether it's Yield Street, Crowd Street, Peer Street, you can almost take any word and add the word street, and there's some
Yeah.
real estate crowdfunding platform out there that does that. But then there are companies like Ground Floor and Our Crowd and others. And the real estate market, what's interesting about real estate is that you can really get narrow and deep in terms of segmentation, right? So maybe you're multifamily housing, maybe you're single family residential, maybe you're a specific type of commercial, right? You can get very narrow, very specific, very deep. Maybe you're only in Omaha or Fargo, right? So, maybe you're in Miami, maybe you're only doing beachfront property. Right. There are like a gazillion different ways to slice and dice real estate investing. And it seems to be that there is a platform for every one of those ways.
Sure. So, with your experience with these type of platforms, are there things that people should watch out for or keep in mind when they're?
Yeah, absolutely. And what I would say is this is not specific to platform investing. This is specific to all investing. You got to do your homework. You got to do your diligence, right? And get smart. The best investments any of us make are those things that we invest in that we have a knowledge of. Right. Okay. Don't the biggest mistake I think most people can make is they hear that something is hot, right? Oh, biotech is hot. I need to own biotech, right? And then to someone says, oh, it's a biotech company. Like, oh, I got a biotech's hot. I'm going to invest in that company. Right? That's not doing your homework. That's not doing your diligence. Right. I'm not sure what that is, but so that's what I would say to any investor, whether it's an alternative asset or a publicly traded security, you got to do your homework.
What I think is interesting when you say that is the fact that traditionally with traditional IRAs, for example, we have been trained or conditioned to just hand over our money and let somebody else do that. It's not something that we even as a population think about. We just have these IRAs just sitting there. And I guess we hope for the best.
Jack, we don't have time for that conversation. We do not have time. Drives me nuts.
Well, your platform and everything sounds really like interesting and appealing. Where do people, like, if they want more information, because like you said, I'm sure we could spend a lot of time on this subject. Where did they find or take the next step?
Yeah, so it's actually pretty simple. I would just ask them to go to www.AltoIRA.com. So AltoIRA.com. Unlike a lot of folks, we actually want to hear from you. We'll talk to you via phone. We'll talk to you via Zoom. If you still Skype, I guess we'll figure out how to Skype with you. But for all those Skypers out there, get on Zoom. If you're in Nashville, knock on our door. So we're happy to help. Or if you just want to email us, that's fine too, right? We're happy to answer questions, or you can get on the chat. We don't hide any of the ways that you can contact us. We have a scheduling capability where you can actually set an appointment to talk to us.
Sure.
So, we want to be accessible. This is new to most people. We get that. We want to help you understand. We can't tell you what to invest in, but we want to help you understand what this is about and maybe provide some guidance as to where you can go to learn more. And we have what I would describe as today a pretty good education center that's getting better and will be really robust by the time we're done with it. But as a starting place, it's a good place to begin to learn.
Sure. No, I really appreciate this. And I always end with, was there anything that we didn't cover that you wish we would have? Got to put you on the spot.
Yeah, no, I appreciate that. I think I covered it, but I'm gonna. I think it's worth saying twice, and that is, I think the team at Alto believe strongly that we need alternative assets in our retirement portfolios if we're going to generate the ability for us to choose for ourselves whether or not how to and when to retire.
Sure.
And, because the forget about it and pray methodology, I don't think that's going to work.
Yeah. No, that's a great way to end this. I will make sure to include all of the links that you mentioned in the show notes, but I really, really appreciate your time today. It was a great conversation.
Jack, thanks for having me. I really appreciate it.